Good afternoon, everybody. Should be up on YouTube now and also on the virtual trading floor. So let's do it. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All trades placed by me, placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Kel is the one real new position on my books here. I'm back in apron, very, very small. I day traded it a little bit today. Day traded it pretty well. I kept a little bit of it, but it's real light, kind of just more of a buyback than anything. But Tel is kind of the new position. So let's go into it. So, coming into today in the morning meeting, I was really describing about how I did not have conviction with this market in either direction. On the long side, it still feels early to me for a new continuation movement here. On the short side, it's trickier now because we're really not extended so much anymore. We're kind of right on this ADMA on the daily chart. We're not too extended. We could absolutely pull deeper into the equilibrium zone, and if anything, that's what I've been expecting. But it didn't happen today. Really just turned into a very tight, very boring range day. It's an inside day for the market, which is technically bullish, right? It lets these moving averages catch up a little bit further. It satisfies, any smaller time frame daily chart extension that's out there a little bit further. So a little bit of a rest day today. It is bullish, and I like when these rest days come in, these types of inside days here, because it potentially sets us up for tomorrow. If we break the inside day to the downside, that could be a trade setup that sets you up to be on the short side of the market for a deeper pullback. If we break the inside to the upside, I'd be really impressed. But this market has been impressive. And we break the inside day to the upside, it just means we had a 2-day price and time correction. Now we're going right back after resistance, and it would be much easier technically for this market to break this 430 to 431 resistance area. This is really like 429 to 431 resistance area, than it would be that first time. That first time is 3 days up. Now we've got a couple rest days. Inside and up would be very impressive and potentially set you up for that break. I'm still looking for a little bit of a deeper price correction here, but the technicals have to be my guide. We'll see which way we're actually able to break for tomorrow. So if you, like me, came into today with a thesis of, hey, I think it's another less is more type of trading session, I don't feel like I have a strong advantage, I want to focus on things where there's relative strength, things that are in play. Hopefully that worked well for you, because you really did not have the market on your side at all. Let's take a quick look at the Qs and the Russell to see if they give us a different picture. NASDAQ here, very tight inside day, right on the ADMA, same story. IWM is also an inside day, right on the ADMA. So same story across the board. The focus that I had for us for the morning meeting today was on energy stocks. I really liked the XLE setup, and I thought that this could be where the relative strength is today and could be an area that we focus on. And that idea worked very well. And it sounds like some of you guys did really well on some of these names that were discussed in the morning meeting. So I know in the morning meeting we discussed basically it was a whole list of energy names. First of all, was the XLE itself above $78, COP, DVN, Suncor, maybe Tallow, Kel on the radar, a little bit different, but also on the radar is kind of an energy stock. So had all those on the radar today. Some of them worked really well. This move in DVN today worked really well. All you had to do was buy the stock off the open through yesterday's high, basically very small risk on it, phenomenal trade. Then we had a second call out in the energy stocks on this pullback in the equilibrium zone. Guys, this is the same pattern that we've been discussing in afternoon meetings recently. When you've got strong stocks, you're looking for trend continuation. This is a trend continuation hammer. Continuation hammer into the equilibrium zone. It's exactly what you're looking for. You can be buying on the way up versus this low. We pulled it out for the XLE. Again, same thing. Could have been involved in the XLE right off the open. If you missed that, these continuation hammers, particularly this one that came in into equilibrium zone, good buying opportunities to kind of get involved in them for further upside continuation. ConocoPhillips also got brought up in the morning meeting. Again, another one that's really nice. I was frustrated this morning. Still am frustrated, honestly. I'll probably be frustrated till tomorrow morning. Whenever I wake up the next day, I'm back to being even keeled and focused. But probably frustrated for the rest of the night. I traded really bad today, and I'm frustrated because, and this is not the first time this has ever happened to me in my career, and I'm sure it won't be the last. You do all the research in the morning, and your research is on point. Your idea generation, what you're looking at based on your research, your thought process, the strategy, it all works perfectly. These energy names are working great. I decided to go after Suncor today, SU, and you can see here by how small this candle is, this was the one that really did not give any follow through of all the ones that we kind of discussed in the morning meeting. So unfortunately, this is the one I decided to focus on. I thought there was an added layer of probability here because we saw that good bullish option flow yesterday. So I decided to focus on this one. And you look at all those other energy stocks that we just looked at. You have that beautiful opening momentum, and a good technical pullback to equilibrium zone, giving you the second buy setup, and then getting continuation. Not this one. So unfortunately, just happened to be the one that I was involved in. So bought some stock early on. Eventually used this little low here as a stop loss. But you can see that relative weakness in there. It needed to hold here. It needed to break up. And that just failed. It was a losing trade for me. And my first kick, by the way, was at 99 cents. I was offered 99 cents to get my risk covered. Did not get filled at that high. So this was just a straight loss for me. That was frustrating. A little bit more of a speculative play that I also lost money in today was this Newegg. We saw this thing being nice and green early. I really don't like the company. I said that in the morning meeting today. But from a technical perspective, we've seen that this stock in the past has had these massive upside days, and I like being involved in what can potentially be a day one. So I thought we were seeing that maybe today with this thing gapping up above $4.50. Luckily, I wasn't too heavy in it, so the damage wasn't too bad. My pricing on it was not good. Started probably $4.70 or something like that, and I think I added in front of 450. Got stopped out of some, kept some. For the move down to 430, which I thought was like a more appropriate out. But really, the momentum was there. I could tell pretty quickly that this thing just wasn't trading right. So lost a bit of money on this one, which is fine. Definitely a speculative name. The risk reward was certainly there, and I lost my risk. But if the name had really woken up, if the momentum was there, this is the type of name where we could have been looking at this thing at $5.50, and then be talking about how happy I am. But then here's really where the mistakes kind of came in. And I always want to be honest with you guys about my mistakes, and hopefully traders can learn from the things I do well and the things I do poorly. At this point, between Suncor and Newegg and watching the other energy stocks go, I just I got in my own head today. I had bad trading psychology. I did all the things today that I always preach that traders should not do if they want to be successful. I was thinking about making money back on lost trades and other names, kind of things like that. I was impulsive. I was emotional. So all of the wrong things. So I ended up like just jumping into this FRZA, which I remember looking at this FRZA the other day when it was like kind of going a little bit, and looking at it, and someone said what the stock does, and I was like, oh, I have no interest in being involved in this. So of course, a couple of days ago, when I'm thinking with a more rational mind and say I have no interest in being involved in this, here when I'm feeling a little less rational and I'm being impulsive and emotional and having bad trading psychology, I'm like, oh, I'm starting to getting into my brain of, oh, there's all these squeeze names that are out there. I just gotta get involved in the right one and make sure I'm early, and then I could be, looking at a stock that's given 100% move intraday. So, and then, as soon as I was in this, I knew it was wrong. As soon as I was in it, I knew that it was wrong. But I still, kind of buy the ticket, take the ride type situation. Luckily, I at least obeyed my stop loss and my risk management aspect of things. I bought on this candle here at 10:20 a.m., which is horrible execution. I did see the inside 5 and up. I got stopped out on the break of that inside 5 basically on this bar. So, no massive pain there, but my sizing was bigger than it should have been. And, just basically took some money and kind of threw it in the garbage. And then I did it 2 other times today also. Just really bad trading. I did a little bit with this Husa, and then with this Husa, I actually did the opposite. I did the opposite, meaning I got into this one and I was like, "Oh my God, what are you doing? You're doing it again. This is stupid. You shouldn't be just chasing these stocks." The thing about this Husa, and I kind of asked about it into the VTF, and it made me like it a little bit more, is I know we've looked at this stock in the past as kind of like a real stock. I remember when this thing was first going, that this was kind of like a real name. So, but I did the same thing in this Husa, and then I was like, you know what? What am I doing? Like, I already wasted a bunch of money on that FRZA. So I just basically just took my entire position and just hit out of it. So my P&L is $22 on it. Probably was risking significantly more than that. Like, it just was like, oh, what am I doing? Like, I can't be taking these names. Like, I'm trading with bad psychology. Let me just hit out and like go for a walk. So I did that. Of course, this one would have worked really well. But it was just yeah, real bad trading on my end today. I mean, I still had a few things that I was able to do well. Um, this tell was also on the radar, and I really would have lost it and had terrible psychology if I gotten stopped out of this. Because I remember, and this was actually adding to my bad psychology, because I'm watching all these energy stocks work really well, and I'm like, I got this tell. The price was $4.20 off the open, which was exactly what my game plan was. And it gives a nice opening move here to $4.33. It's being a little bit greedy. My first offer was $4.36. So I hadn't sold any yet. Again, watching all these energy stocks that were on my game plan list today go without me. And then next thing I know, this thing's pulling back. And it looks like it's going to stop me out. Well, this one actually held my stop by about a penny. So a little bit lucky there. And then this one actually worked really well and then paid me. So I did do some good things today. I followed my game plan exactly as I'm supposed to on this. I really didn't let my negative psychology from the other things I was doing poorly impact this. So that worked out really well. This 9 that I'm in from yesterday, this also padded me some P&L a little bit. That kind of helped, gave a big move. Shout out to Stefan for kind of pitching that one and getting me involved. I traded apron decently today. I kind of got back into this on this, pullback into this $5 area after, making this move, making good money in it, but it got ahead of itself. But into this pullback, but traded it back and forth a little bit, keeping a very small position on it. So I traded that one decently well also. A little bit of snap into that $12 area, maybe a few bucks. A little bit of Amazon, but I closed out of it. Again, kind of bought a little bit of a dip in Amazon, but closed out of that by the end of the day. That was a few bucks. Same thing with Google. Bought a little bit of a dip, kind of near lows on this one. I think 119 was what I bought. Made a couple bucks on it. So I did some things that were okay today, but I made some errors and really didn't trade properly and had bad trading psychology, and it just really annoys me. I'm very hard on myself when I feel like I do anything wrong, because I've just been doing this for too long. I've just been doing this for too long to be making impulsive decisions about the market or thinking I got to make back the money I lost in Newegg and FRZA by just taking the offer in this Huza, or the money I didn't make in the energy stocks that was on my game plan, and I'm down money in Suncor. So let me jump into some random stock that I know nothing about just because it looks like some volume's coming in and some momentum is coming in, even if the technical setup's not great. That is all just real poor psychology. It's exactly what you're not supposed to do. You're supposed to take every trade for itself, for the trade, because you researched it, because you game planned it. You're not taking more stock than you should take because you're thinking about making back P&L from other places. That's just the wrong thing to do. So yeah, I mean that's my day here. End of the day, I am negative on the day a little bit, but it's not, it's not anything that's really damaging. It just is what it is, and I got to, wake up tomorrow and just get back to just doing the right things consistently over time. Thanks, Rich. So and that's what, if you guys remember when I was trying to do those like little TikTok videos and stuff for a little while last summer, what I would always say is all I need to do is just do the right things consistently over time and I'll make money. And that is still 100% accurate. Today I didn't do it, but tomorrow I will. Tomorrow morning I'm gonna wake up and do my research, and then throughout the trading day I'm just gonna do the right things based on my research, based on my game plans. I'm going to do them consistently, and then some days I'll make money, some days I'll lose money. But I know that if I follow my rules, if I follow my edge, in the long run I'll be consistently profitable. And that's it. That's all I got for you guys. So yeah, happy to happy to take a look at any thanks. Anything that you guys have. So I'll just scroll back up here to the VTF and I'll go through comments and questions. I think the first thing I'm seeing here is from Chinggis asking me about Sox L yesterday. Oh yeah, that's right. I forgot about that internet dropping on me yesterday at 2:05. Yesterday at 2:05. Well, that was after the Fed minutes came out. Normally I wouldn't like that time of day, but here, I like it. Did the market give an inside 5 there too? The SPYs did. The Qs did not. But the semiconductor here ETF did. On the inside 5 after the Fed, it looked bullish, and then so I really like this trade actually, this inside 5 and up here, because you've got real confirmation now on the move on the Fed minutes taking that long. Like the first bar comes in, we know there's a lot of volatility usually on the first bar on a Fed day. Sometimes you get a fake move, like sometimes, and I always say this doesn't happen all the time, and here's actually an example of it. But sometimes you get the fake move up followed by the down move, and then the real moves to the upside, and they kind of fake it back and forth a little bit. Here they didn't. The move was up, and then the move was up, and then I know with the market, it eventually by the end of the day retraced back to where it started, but there was never really any down move post Fed minutes yesterday. And I really like this setup here because you've got kind of confirmation. You got your first bar that's got its volatility, fine, hard to measure that. And then your second bar, it's a little bit wide ranging, but it's an inside candle here. If that inside candle is breaking to the upside, it's really confirming now here after 10 minutes post Fed minutes coming out that the directional move here is going to be to the upside. So I like it. Normally, I don't necessarily love like a random inside 5 that would come in at this time of the day. But this is not a random inside 5, and this time of the day was important because the Fed minutes had just came out. So I really like the setup here. Then later, another trade at 250. Yeah, I don't love that one as much. We don't really hate it either. Lower probability for the continuation because of the move up to that price, and that Mariposa candle did not help. So this Mariposa candle doesn't help, but it's really just a pullback in an equilibrium zone. So this actually could be a trend continuation setup also. You get your, I think I remember calling this one out actually for the team. So you get your initial inside 5 and up, then you get your continuation hammer kind of off the EDMA. You get extended. The extension pulls back the equilibrium. It starts going sideways. Gives you this inside candle here. The inside candle breaks to the upside. I like this as a long. The market just decides it's not going to give upside trend continuation at that point. And I'll be honest, I remember calling it out on this hammer, saying, there's a hammer here. You could go long versus the low. I was talking about the market, not Soxcell specifically, but somewhere. Or you could go long here versus that low. I don't have a ton of conviction on it. That's how I would feel about this too. I didn't really believe in this up move yesterday. And that probably has to do with more my bigger picture thought process on where the market is and what the Fed minutes were saying, and I'm kind of being old dad at this point. So I would, you should rate this trade as almost just about as good as taking the trade that I had called out. You want your inside candle here to be giving you, upside continuation. And it didn't, but it doesn't make it a terrible trade. So I kind of like, both your setups here that you're talking about. And I got another question here. Can you also please speak about the price action that conflicts the price action in a sector? I don't really understand the question. TEL versus the XLE. So TEL is a little bit different than just the XLE. I don't know specifically if TEL is a component of the XLE. I'm gonna go ahead and assume it's not because of the kind of the pricing of the stock, and it's a little bit of a different type of company. I think TEL is a little bit more involved in they're a bit more of a speculative play based on some technology I think that they're working on. I know if Matt's listening, he could probably give better feedback than I can on this one. And they're a little bit more nat gas focused, I think, than a lot of the other XLE stocks, which are going to be probably more oil focused. So I definitely would not expect you're going to see a much closer correlation between the XLE and ExxonMobil, Chevron, Oxy, Apache, like those real XLE component stocks than you are going to be with TEL. I'm not saying don't pay attention to what the XLE is doing or what USO is doing or what UNG is doing while you're trading a TEL. You should, probably especially UNG more than any of them. But you should not be expecting to see like a one-to-one correlation here between a cheap, speculative, more nat gas focused name as you would with XLE. But let me read the rest of your question. At 9:45, was printing the red Maribozu when the XLE was breaking out. Is there any significance in that price action? The price action coupled with a deep pullback got me out of the trade, even though I already covered my. I hate that. That is exactly the mindset that is slowing me down to get the consistency. Yeah, you're overreading it. Buy the ticket, take the ride, right? So I think I already answered your question about TEL versus the XLE. And if you are exiting TEL because of relative weakness to the XLE, that's just not trading properly. And if you already have your risk covered, in my opinion, you got your risk covered on the trade. Stock's pulling back here, and you bail. I don't know where you bailed on it. But let's say you just bailed on this trade at $4.26. I would rather you make nothing on the trade. You'd be better off. You'd be better off making nothing on the trade. You'd be better off giving it back to your original stop loss and making zero than making the small amount of money that you made by getting out at, and again, I'm just making up this price, 425, 426. You're making such a small amount of money there, you're literally better off having this trade fail and being a zero. Because all that sale is really going to do for you, you're not making money here. You're not making money here by getting out at $4.25. That's not money. Whatever you're up in this thing by getting out here, it might as well be zero. Because it's not going to be the money that's going to give you consistent profitability. It's not going to be the money that, is going to ever make you anything. So I truly think, look at whatever your P&L is in the stock, you'd be better off with $0 of P&L. If you're up $50 in it or $100 in it or whatever, take that $100 and just like this is garbage money. Like you don't want that money. It's literally better off being zero. Because if you actually followed your game plan and you bought the ticket and you took the ride, just like I was saying, I'm in it. I was very frustrated when this thing almost stopped me out after taking a loss in Suncor and missing XLE, DVN, COP, all the other names. I was like so frustrated at this time, and I'm like, oh my god, I can't believe we could stop out of this too. And then it helped my out, and then it ended up being like my best name of the day, and just given a phenomenal move. It's up 13% at the end of the day. So you really got to take the trade and follow your game plan. It's the most important thing. From Darby, do you ever enter on a continuation hammer, reversal hammer with a buy stop 1 penny above the close for extra probability of success? No, I don't. I just once the candles close, it's enough for me. DVN 1005 hammer, for example. The hammer alone is good enough for me once it's closed, or sometimes I don't even wait for it to close. But it's showing me that it's on the way up. It's showing me that the tail is formed. I have a specific pivot or attempted pivot that the market is trying to provide to me. The spot here where buyers are trying to gain control from sellers in a stock where buyers are already in control. That's really what this type of candle is, where the candle being closed, I'm in, it's enough, it's it. If anything, waiting and buying higher is just going to give you probably a worse risk reward on the trade. Also, do you ever close more than half your position at 1-to-1? If so, what's the point? No, I really don't. similar to what I was saying with Chinggis, I find at that point that doing things like that is more reward limiting than anything else. Um, Gotcha, DJ. I find that it's more reward limiting. You know what? Why take off 75% of your position at 1-to-1? Like, you're not gonna, like, you really need that other 50% of your stock to make the overall risk reward of the trade worth it. You know that selling 50% of your position at 1-to-1 on your risk. It's not about making money at all. It's not about making money. It's about managing risk. That sale is about managing risk, not making money. And you need the other 50% of your stock to pay you, right? That's where you're going to be going for that outsized risk reward. That's where, once you're in a win-win situation, you want to be as greedy as you possibly can be to really maximize the reward to make real money for yourself. From Anthony, it's funny that they don't block out the word sucks. You can't even say the word but I guess you can say that. Sucks that you did that today, but makes people like myself realize that it happens to everyone. So wild that we can recognize it while doing it and still keep doing it. Yeah, still keep going with the trade. Yeah, 100%. That's how I felt today. Do you feel like you would have been better walking away? Absolutely, I would have been better walking away, and I actually did at a certain point. I did at a certain point. I wanted to get off the radio, and I'm really trying to be on the radio for that whole first hour, and then switch over to Pat and have Pat come in at 10:30 and give you guys some communication for the next however long that Pat's able to stay on. Man, I wanted to just turn the radio off at 10 o'clock because I was just so frustrated and I was not doing good things. And I was like, all right, whatever, I'm going to stay here. And I wanted to walk away so bad because I knew I was just not in the right mindset at all. I think I said it at one point too. But I stuck with it till 10:30, and then I probably stuck with it a little bit on my own, to be honest with you, even after that, when I should have walked away. And then eventually I was like, I gotta find something to do besides taking the next silly trade. I'm just not in the right mindset for it. From Austin, kudos to you for your honesty and for using your mistakes to help us get better. That's why we're here. Appreciate it, Austin. Really appreciate that. Thanks, Rich. Really appreciate you. Keep it real. Yep. Thanks, Nick. I appreciate that. JK, I appreciate that. From the moon on XLE. If I were long XLE today at whatever price, would you recommend holding it overnight if I have a cushion? Yeah, I mean, if you're long XLE from early on or from this continuation hammer, you probably have enough of a cushion to keep it. Definitely if you have it from the beginning of the day. And this is exactly where you do want to swing. You want to swing your positions when they're closing really well in the money for you, so you can further maximize that reward. This XLE chart looks phenomenal. What if this is a day one of a breakout that leads to a trend back to $92? It could happen. We could be on a day one of a breakout here that's leads to $92. Probably not, but I don't. Probably not is still probably yes. Or potentially yes, I should say. And that potentially yes, so if you came in and you bought XLE early on today with 25 cents worth with a risk versus 78 or something like that, and it is, even if it's a lower probability situation where this breakout leads to a trend, next thing you know we're back at $90 with this. There's your risk reward. That's what you're looking for. So yeah, that's how we maximize the rewards. Took a loss in CSIQ when you were profitable. Yeah, you can't let yourself do that. Really important that our winners are winners, and you want to actually have rules for yourself where you do not, as a rule, turn a winner into a loser. And that's talk about some of that's sometimes when you're buying back stock or you're buying additional stock after you've already been in the position. Whenever you're already in a position and you're getting paid for it, you're going to be buying additional stock or buying back stock in the name. You really want to make sure that you're doing it in such a way where if this trade now completely fails, you're still going to be profitable. if you're buying so much stock after you're already in the money on it because you feel like, this could be a psychology thing also, like, oh, I didn't make enough money, so now I'm going to take even more here now, and then you get stopped out of it, and you lose money in something that should have been a winner. That's bad game planning, bad psychology. So again, it really comes down to game planning. Make sure that whenever you're buying stock back or buying more stock on a trade that you're already in that's already working for you, the math behind the game plan is done in such a way that you can't lose money in the trade. And then it might be worth it. You're buying back that stock for more reward potential, but you're still in that win-win situation that I'm always harping on. Get yourself in the win-win situation, and then you can have flexibility to be greedy. You can have flexibility to sell some stock and rebuy it back a little bit lower. But try not to turn your winners into your losers. Thanks for sharing with us on that, Judy. From Alex, when you see a 5-minute hammer trailing down into equilibrium at the 10:05 candle in DVN, the 10:05 candle in DVN, what are the major layers of probability you're relying on to take that trade? Relative strength, absolutely. Relative strength of the name, of the sector, volume ideally, which, we didn't really have that here. Market ideally, which we also didn't have. So you're always assessing all those layers of probability and assessing how many of them are on your side versus how many of them are not. So with DVN today, you had the relative strength of the stock, you had the relative strength of the sector. You had, a little bit of an uptick in volume on this thing today, but I wouldn't be overly convinced that that's a layer of probability that's on my side. For this specifically, you could say that USO is green, so that's going to be a layer of probability on your side. It's not one of those ubiquitous layers of probability that are going to impact every trade, but it's a specific layer of probability for trading an energy stock, is that USO is green. And then you're assessing, all right, well, the market's not on my side, so that's, market was really neither for me nor against me, so that's neutral today. No specific new news that I saw, like for this particular company or even really for the sector itself. I think there was some yesterday. So I don't really have that on my side. That's exactly the thought process you want to have. Everything. From Ramon here. For covering risk, do you sell cover half your position at 1-to-1 or 1-to-2 to get your risk? 1-to-1. 1-to-1. And you can re-review the first class I have where I kind of first class? No, it's the game planning class, I think. So just use some simple math here, right? Let's say you bought a $50 stock, 1,000 shares. Stop loss is $49.90. Your risk is $100, right? 1,000 shares, 10 cents of risk. You have $100 worth of risk. So my risk is 10 cents. Where am I going to be 10 cents in the money? Where will I be 1-to-1? At $50.10. So if at $50.10 I'm offered 500 shares there, half my position, I put $50 in my pocket once I get that fill. Now, if the other 500 shares goes all the way back to my stop loss, I made 10 cents on 500 shares. I lost 10 cents on 500 shares. Net, I'm a zero. 1-to-2 would mean that you were selling at $50.20, which is, you could experiment with selling a quarter of your position. In this case, 250 shares, no odd lots, but just for simple math purposes, you could sell 250 shares at $50.20 and also have your risk covered, and then have significantly more stock for the trade to work out. But it's a lower probability fill. I think it's relatively easy if you're good at trade execution to get 1-to-1 kicks. Getting 2-to-1 kicks is a good bit trickier. So if you've got good trade execution, a lot of times you can get that 1-to-1, you get that risk covered. You bought at $50, you're selling at $50.10. Then your other stock is either stock where you're being greedy, or it stops you out, and then it's kind of a break-even type of deal, which is exactly what you're looking for. Judy Scalp right back to green. Good stuff. Yeah. So today you might have. They were moving them all today. Shane, back to DVN. I bought pre-market at 65 quarter. Nice buy. And game plan to give it to 64.59, which is a pre-market low. All right, I do that sometimes as well. It should be like almost like a feeler type of stock. Like you're just buying a very small amount of stock there, and then you're what's Bed Bath and Beyond doing? Oh, smoked. Whew. Wow. Um. Anyway, sorry, I got distracted by Bed Bath and Beyond. Uh. Yeah, so if you're doing what you're describing here, where you're giving that much space, I think that's got to be on like a smaller feeler amount of stock, and then you need to be looking for a way to get heavier on tighter risk. With BVN, that could have been just buying it through yesterday's high. This was the inside day one, right? Yeah. So just buying it through the inside day versus the opening low. So you got your initial 400 shares, like you're describing here, where you're willing to risk $130 on, you're giving a little bit of space. Fine, that's your feeler. But then I feel like you should be doubling your risk on the actual buy, so that you've got real stock, you've got size to actually be able to make bigger money on it on tighter risk. And then when it starts to go, I would raise my stop and everything to today's low. So that's how I do it. I sometimes buy with that feeler where I'm giving it a lot of room. I'm looking for that signal to get a lot more stock. Hopefully that signal hits. I get even more stock. Maybe I don't. But either way, once it really starts working like this, then I'm raising my stop to this low. Hope it helps, Shane. Trade 117. What's the low on this Bed Bath & Beyond? 1222. I'm not going to keep an eye on this. Did new news just hit in this that I missed at 410? If so, if someone could copy and paste that. Yeah, but didn't we know that he was going to do that? Got you. Yeah, that kid crushed it. Got you. Yep. I get a reference thing. I mean, it belongs back to $5 where it was when the squeeze started. Or below, honestly. All right, anyway, back to the questions. From Trade 117, for the layers of probability, are any higher weighted than others? Does that shift the market being on your side more important than volume? It's a great question. I don't really have like an order list when I look at like the layers of probability from that class that I have, the 8 or 9 or whatever it is. I don't really have an order of importance that is going to be the same for every trade. There might become like a little bit of an order of importance, I guess, in my brain as the trade itself is actually happening for that individual trade. And it's even that might not be an order of importance so much as it is just kind of assessing things. You're like, oh, am I fighting the market here? Well, if I'm fighting the market, is the volume there? Or is there news there? In which case, maybe in this circumstance, the news and volume outweighs the fact that I'm fighting the market. Or in another circumstance, it might be the opposite. I'm really relying on the market to help me for this trade. So yeah, not like directly am I considering some to be more important than others. It's more of an after the fact or in the moment type of thing with certain individual trades, I should say. You got an adjustment to make. Speaking of fillers, I asked about the concept. I was talking about that when the internet died yesterday. So yeah, so I was just talking about a little bit with Shane's kind of trade there. So for me, a feeler is more like a placeholder, right? That's how I was describing it yesterday. It's a bookmark. Like, oh yeah, I'm interested in this, stock from maybe it's going to be because of daily technicals, but I'm not going to take a large position on it with the daily chart stop. Like that the risk side of the risk reward equation is usually no good. And Shane, that kind of goes back to you also with your question there. Like the space that you gave DVN, if that's going to be the extent of the amount of position that you are taking, I think that it makes the risk side of the risk reward equation much more difficult. But I will do it too with a feeler, but the feeler serves a purpose of, I love what this daily chart looks like. So you know what? I will take this feeler and I will give it this room, even though I know that there's no, good risk reward really for me kind of doing that. But I want to watch it closely. I really want this on my radar, and if things are looking proper, then I'm going to get in and I'm going to add some size and find a place to be able to do it with smaller risk, and tighten up my stop on the ad trade, or tighten up the stop on everything, like what you're saying with DVN. At a certain point here, even if you had stock that you were given more room to, like Shane was talking about, once this thing went and the EDMA caught up to lows, you could just put your stop for everything here. And then that risk reward is going to make more sense also, and hopefully you're able to get heavier, and that's how you're going to make bigger money. And again, the idea of even a feeler, like I was saying, from when I was a newer trader, it certainly depends on what you can afford and your account size and things like that. Because if you're dealing with a decent account size, then it's not going to be an issue to have a feeler out there that maybe it costs you a couple $100, but whatever. It's not. It's going to be a very small percentage of your day-to-day P&L. Or maybe it's the opposite. Maybe you're dealing with a very small account, and you can't just have a feeler that could potentially waste $200. I mean, I wouldn't consider that a waste. It was serving a purpose, but it's too much for the purpose of it, right? So you just got to be really just focused on the trades that kind of comes in. So hope that helps there, Anthony. So when you get that heavier ad, you're covering half of 1-to-1 on the ad, or is the game plan different? I don't always do the same thing every time with this. If I'm raising my stop on everything, like what I'm talking about with DVN, then the 1-to-1 will probably be on the entire position. If I'm not raising the stop, which I'll sometimes do, then the 1-to-1 will be probably just specifically on the second tighter buy. So it depends on the game plan that I'm actually creating for it and what I want to do, if that makes sense. Cool. All right, squad, anything else? All right, well, let's wrap it up there. Great questions today. Oh, one more sneaking in from Ramon. Do you think alerts can be substituted for a feeler for developing traders like myself? Yeah, you can. So I use alerts. Really heavily encourage using a system of alerts. It makes it so that you don't miss things. I do think personally it doesn't quite have the same effect as being in it. When I'm in it, I'm like really watching it and have a really good understanding, as opposed to I'm not looking at this at all and my alert just popped up and let me look at it now and try to dissect all the information. So I feel like I'm going to be armed with a little bit better of an understanding of the price action if I was actually in it than I was just using an alert. But I think you can use alerts also, and I certainly do all the time, every day. So that's it. I don't think so, Mike. All right, gang. We'll wrap it up there. Again, great questions. Thanks, Mike. Great questions from everybody. Appreciate that. I'll see you all tomorrow morning, and tomorrow morning is going to be a new day. So all I got to do is just do the right things consistently over time. That's it. That's all I got to do. See you, everybody.